Hi, Andrew Bell with you for my fortnightly report. And today I thought I'd do something different and to talk about finance because we've just had an interest rate drop and it's so topical at the moment. Everybody's talking about cost of living and how expensive everything is. And I think it's so often that people forget that you can make tweaks and really make a difference with your own home loan. So I thought first up I'd introduce Lauren Hall. Lauren Hall's been with Loan Market, been in the finance industry for over 15 years and was named Broker of the Year for Australia for financing. So there's no one more competent, but I know more caring than Lauren Hall. So thanks for joining me today.
Thank you, Andrew. My pleasure. Thanks for having me.
Just want to share with people, there's so much talk about finance at the moment. What is the sort of the chatter at the moment? Obviously interest rates.
Absolutely.
Is there more that's in the kind of conversation about finance at the moment?
Yeah, so definitely interest rates is obviously a big topic. A couple of other parts in there. The AI space is a big one for us. How is that going to change the way consumers source funding or how loans are originated? So that's obviously a big piece for us. Data security, the cyber piece around that. So how do we move with the way AI is going but keep consumers' data safe and speed the process up, which is obviously a big one. The other main one is around that cost of living. We were chatting a bit earlier around a recent study by Finder that over 20% of Australians are now allocating over 50% of their household income towards their mortgage. And if we think of the traditional sort of older, school approach, which was really 30% was sort of that,
max,
ideal, right, figure, you can see why families are starting to feel quite stressed.
I see defaults of loans are down. Is that because banks are a little bit more cautious about how they approach defaults at the moment?
Yeah. So there's some good support from the banks around helping clients through hardship or times that are a little bit more difficult. We obviously have options around some loan holidays, interest-only repayments. So there is some support there from the banks around helping consumers through that stage, which definitely would be reflected in the defaults looking a little bit lower as well. They're trying to support their consumers more.
So we've seen, of course, a lot of talk, particularly the last month or two, about interest rates. So many people forecasting a drop a couple of months ago. That didn't happen, and again last month. But we've just had a rate drop.
Yes.
So this is this battle between inflation, interest rates, economy, and so on. What is the general consensus in the finance industry about the number of drops and over what period of time?
Yeah. So the major banks now are predicting, so we're sitting at 3.6% is the cash rate right now after the drop on the 12th, on Tuesday. So the major banks are predicting that we're looking at that moving to around 3.35% by the end of the calendar year and hopefully a shift to closer to 3.1% by mid-2026. So still some move. That's where they reckon they're going to sit. So if we look at hopefully rate drops following that pattern, we'll be sitting pretty close to a 5% figure would be ideal.
Yeah, when I hear those numbers, I think back through my career, I can remember interest rates at 16%. We used to talk about shoot loans were 10.5%.
Yeah.
And so it's quite remarkable because we all adapt to whatever the circumstances
Absolutely. And the main difference is that is also the amount that we're now borrowing is significantly more than what we were borrowing back then. And that's again where we see the amount of income that's been allocated to afford that mortgage payment. The debt amount is so much higher combined with obviously those rate increases that we had so dramatically over that 18-month period. A reduction in rates is definitely where we're all wanting it to go, just to have a little bit more money in the household budget, I suppose, at the end of the week.
So it wasn't that long ago we had a Royal Commission into finance. But what I've observed since then is that it's actually made finance more accessible than it used to be. There was kind of some pretty strict guidelines, but now they seem to be more open and generous around finance than they've ever been.
Absolutely. Policy's great at the moment. So for us, we have 65 different lenders that we can work with. So that means that depending on the nature of your income or your deposit, the structure you're looking to lend under, even under residential and commercial, there's some great flexibility around the different policies that are available. Yes, the borrowing capacity piece is difficult because of that APRA regulated stress buffer, but the actual policy piece is really flexible. So we're finding that there are great solutions out there for borrowers who are looking to buy and to get into the market, where previously it was more restrictive.
You know, with that Royal Commission, I think everyone thought it might have been the end of brokers, and there was this sort of a deep study into the role of broker, and that, you know, they were going to take advantage of people and so on. But it turned out to be quite the reverse.
Absolutely.
And now is it like 76% of all loans are done through brokers,
It
and
is.
banks have almost surrendered.
Yeah, 100%.
So you play a role that an individual bank can't play. What's that role?
Yeah, so one of the great outcomes of the Royal Commission was the introduction of best interest duty legislation, which gives the consumer trust that a broker is acting in their best interests, okay, as opposed to a bank who acts in the best interests of their shareholders, which is standard. So for brokers, yes, 76% of consumers now choose to use a broker, and that number just continues to increase. And that's because we provide choice, we keep the banks competitive, and we're advocating on behalf of the customer, right? So we're there to get you the right outcome or the right solution for your circumstances. So consumers are choosing to trust, and it's not just a trend, it's something that's been built on trust in our industry, but trust brokers to be their advisor, I suppose, or that trusted advisor when they're looking at getting money or borrowing money.
Another thing that always, I guess, is frustrating for me is that people kind of feel I've got a loan and that's it. It's set, and they never think about getting a health check. Why do you think people are not regularly checking whether I've got the best loan in the marketplace? Could I do better? Could I save money?
A small part of it is a bit of loyalty, but the main thing is because we're busy. Life is busy and it feels hard. It's too hard. Even to find your interest rate now on internet banking, you have to go through 2 or 3 different tabs on your loan to actually even find the interest rates. One of the most difficult things to find about your loan. And that's by design, right?
Yeah.
Correct, it's definitely by design. So we're too busy and it's too hard. And it's a shame because we talk about loyalty tax, right? And it costs you money to stay with your bank. So if you've been with your bank or your loan's been with your bank for more than 4 years, on average your rate will be 0.4% higher than if you were a new customer walking into that bank today. So you're not rewarded for loyalty. In fact, we call it loyalty tax. It's costing you money. But you know, that's for us, for us as brokers, we're there to find that best deal for you and do that legwork and do that paperwork. And even if it saves you a few $1,000s a year, that's money that we would rather have in your pocket than in the bank's pocket.
First home buyers, saw the other day that they make up 35% of all of the finance so far this year. 35%. And I think the reason for that, tell me if I'm wrong, is the actual grants are better than ever been.
Absolutely.
And qualifying is easier than it's ever been. You can actually buy one and rent it out.
Absolutely, yeah.
Amazing.
Yeah. So, and that's just that the government offers for first home buyers are the best they've ever been. They're amazing, state and federal government. Plus the way the banks also look at first home buyers. Now there's some really flexible policy again in that. Being able to use border income because now Queensland state government says you can rent your rooms out if you're a first home buyer.
Yeah.
You know, and having the ability to use that extra income to support your borrowing capacity. Better interest rates, accessing better borrowing capacity. So the first home buyer market is continuing to grow and it's a big space that we support. But I think it's never been a better time. Absolutely.
So on the back of that, we're going to be holding a first home buyers information night coming up in September. So I'll keep everyone posted because I know mums and dads, everyone's trying to get their kids into their first home, whether you've just left school or indeed you're a young couple trying to start your family and so on. So thank you for this kind of a all-round view. We are limited on time and I don't like to keep all our viewers any longer than necessary. But I think finance is critical. I'm going to put your details on screen so people can reach out directly to you if you want to get your health check to make sure you've got the best loan going, or indeed if you're in the marketplace, make sure you check with Lauren first that you're getting the best loan you can, and we'll keep you posted about the first home buyers evening. All the best for now.